Okay, let's get started. Hello and welcome everyone. Hi, it's lovely to see so many people joining us today. It's a slightly different time of day than usual, but it's nice to change things up a little bit. My name is Danielle Stein-Fairhurst. I am a financial modelling specialist. I'm coming to you from Sydney today, all the time, where I've always been. We have been in lockdown now for, I think it's been 10 weeks, gosh. But the meetups can still continue, which is fantastic. So we get together every now and then to talk about a topic that is very close to my heart, my favourite topic, which is financial modelling. And every now and then we get a guest speaker to talk to us about a topic relating to financial modelling. So today I'm joined by Jessica D'Souza. So she is based in Brisbane. Jessica and I have known each other for quite a while. We actually co-host the Brisbane CPA Financial Modelling Discussion Group. Hi, Jessica, how are you doing?
Hello, I'm great. Thank you for having me.
Good. It seems like forever since we've actually hosted an actual face-to-face discussion group in Brisbane, but I have faith that we'll be able to do it again one day.
I think perhaps the first one was, and then after that, we went into lockdown.
Yeah. But we have been still getting together about every 3 months or so with the Brisbane group, which is really good. And then we run these sessions, which are open to everybody. So, tell us a little bit about yourself, Jessica, and then I'll pass over to you to give us your presentation on harnessing your inner financial modeler.
Oh, thank you, Danielle. Well, I'll quickly tell you about myself, but I've got it in one of my slides. So I'll go into my financial modelling journey a bit more.
Right.
So I'm currently the Corporate Business Analysis Manager at Brisbane City Council. I think a few Brisbane City Council people are joining us today, so I'll give a shout out to anyone who's on the line. So my job there is we look after the long-term financial modelling for council, looking after the sustainability. So there's lots of financial modelling there, and we also do a fair bit of analysis on business initiatives, and that involves some modelling and also reviewing business cases and all bits and pieces that involve financial analysis tend to come to our team. So it's a very interesting role.
Sounds great.
Do you want me to share my screen now?
Yes, please. Let's get into it.
Okay.
We've got a few comments coming through in the chat, so do feel free to say hi in the chat. If you've got a particular question that you'd like Jessica to address, you can pop that in the Q&A down below. Yeah,
feel free to ask questions as you go. I might not see them, so I'm sure Danielle will keep an eye on it for me. Can you see my screen now?
Yes.
Yeah, wonderful. Okay. So the topic today, harnessing your inner financial modeler. It's wonderful if you've found yourself to this group and financial modelling is something that's fairly new to you. And I think that's really exciting if we've got new people joining us. The reason I wanted to do this topic is that I think it's a bit of a daunting area where people might feel that, what's financial modelling? It's a fairly new term. Do I need to do a lot of study to get going with financial modelling? And I wanted to do something that, I guess, demystifies financial modelling and gets the idea out there that there's lots of professionals who actually would probably be doing financial modelling already in their role. So in accounting or IT or finance, banking and finance, there's often elements of financial modelling in there, but people don't necessarily think of themselves as a financial modeller. Or they could be doing lots of financial modelling, but they're possibly, and I know this was the case for me, the only ones in their organisation who are doing financial modelling. So they don't really know who to go to talk about best practice. How do you know you're doing the right thing? When you're doing, say, financial reporting, there's often external audits where people will come in and tell you if you're doing the right thing or if you're doing the wrong thing and what's best practice. But often financial models aren't seen by anyone external to the organisation. So you're just not getting that feedback about what's good and what you can work on in your models. So that's why I wanted to do this topic, just to open up financial modelling a bit to those that aren't necessarily, in chats all the time about it or haven't done any formal training yet with it. So that's what we're going to go through today.
Yeah, I think that was one of the reasons why we started the Meetup groups as well, wasn't it? Particularly in Brisbane, to be able to get together and talk about financial modelling.
Yeah, and just feel as if you can ask any sorts of questions and you don't have to come at it being an expert. So today I'm going to go through, firstly, I'll go through my story, how I got involved with financial modelling. Then we'll look at, well, what exactly is financial modelling? If we're doing it now, what is it? Then we'll look at some common issues that come up with financial models. And I'm guessing that a lot of people will be familiar with some of the things that come up. Then we'll look at best practice principles you can start applying today. So I wanted to have I've come up with 10 principles that I think are things that you, without doing a lot of study, you can start doing them in your modelling now. You really can actually start with some of these things today to improve your modelling. Then at the end, we'll have a quick look at some accreditation options for people who do want to take it further, and also some resources. And I've done up a list of resources that we'll send out after as well. So don't feel you're going to need to write them all down as we go. So firstly, my story. So I started out as a graduate at Telstra, and I did all sorts of weird and wonderful rotations. But one of them was in an area where we did financial modelling for business cases for marketing and sales. And I just thought it was fascinating. So when I got to the end of my graduate program, I was lucky enough to get a job in that area, and I had some really good mentors that used to take me through, how you do a financial model, how you discount it, and that set me up for being interested in it all throughout my career. I went to Virgin Australia then, and that's the only place that I've used a specific modelling software. So we used Cognos there to build our financial models. I then went on to Serena Russo Group, which is really where I became that expert that didn't, I quickly learnt to do very complex financial models that we had to do for tenders there. So there was a lot of pressure. If we didn't get the pricing right, potentially hundreds of people would lose their jobs. So it was something that I needed to get up to speed with quickly. And I really enjoyed it, but I definitely became that person where, because I learned the skills quite quickly, I didn't have anyone else to talk to about it because other people just weren't doing that much modelling in their day-to-day work. I've then gone on to Brisbane City Council, and I've talked through my role there. So the search for best practice, that came about at Serena Russo Group when I was searching around going, well, I'm building my models this way, I'm learning by trial and error, but are there better ways that I could be doing this? I just have no idea. There's probably, 3 other people in Brisbane that are doing this type of thing. I don't know. So I started looking around and seeing, are there any courses? Like, what's out there? I saw there were some international standards. There's a standard called FAST, but it was sort of, without having anyone to talk to about it, I wasn't quite sure. So I searched around for a course, and I found Danielle's course. That's how I first met Danielle. So I think I tried to do it in Brisbane, but I couldn't get there. So eventually I ended up going down to Melbourne and doing the course. And that really opened it up for me to see, there are actually people who specialise in this. And when I was down there, I did a Meetup group, which was one of Danielle's earlier Meetup groups. And this was in person, this was pre-COVID. And at this Meetup group, they talked about the Financial Modelling Institute. And they said, we're just starting this up. This is about maybe, 3 years ago. We're just starting up doing accreditation for financial modelling. So I thought, I like a challenge. I'll see.
Was that one of the meetups when we were in the pub in Melbourne?
No, it wasn't in a pub. It was at NAB.
Oh, yes. Gosh,
yeah,
go around to different venues.
Yeah, meeting rooms. So they talked about having that they were going to start this accreditation, and so I just decided, well, for a challenge, I'm going to do this. So I did my advanced financial modeler accreditation. I think it was about the second exam that they held. And back in those days, there was no training. So you just had to self-teach yourself the materials. Now there are lots of training providers, including Danielle. And then financial modelling community, as I said, I went to that Meetup group, and recently Danielle and I have started up the Brisbane group. So it's been an interesting journey for me. And I will say I don't do that much financial modelling, direct financial modelling these days. It tends to be more review and planning for the models at City Council. So from that, I've learned, well, when you're auditing a model, best practice really comes into it, because it's so much easier to audit a model that's been done in a step methodical way, following these best practice principles. So I'd encourage anyone who's involved with financial modeling, if you can review someone else's model, go for it, because it gives you great insight into what you would like to see to make it easier to understand the model.
Such a great way to learn, isn't it? Learn stuff off people that I've never met just by going through their models.
Yeah. Okay, so what is financial modeling? Well, the first thing to know is it's more than just spreadsheeting. So if you're using Excel, doesn't mean you're necessarily preparing a financial model. So there's generally 3 common elements that make something a financial model. The first one is that it should be dynamic rather than static. So if you change the inputs, it will change the outputs. If you're bringing in data, cleaning it, and maybe analysing the result, it has some historical numbers in it, and it's static, then it's probably not a financial model. What makes it a financial model is the ability to change one or more inputs and see what happens to the output. So it's flexible. The second thing is that it has assumptions. So these are the variable inputs in the model. It contains more than just historical data. The assumptions are the things that we're making assumptions about, we're making projections about. And some of them will be more certain than others. So, for example, an assumption might be the GST, or the sales tax rate. And that's, in Australia, that's fairly certain that that's going to be the same for the next few years. Versus something like a foreign exchange rate is also an assumption, but that's much more variable. And the other element about a financial model is that it involves a future time period. So we're usually solving a business question, and that involves looking into the future and estimating what is going to happen. Generally, if we're only reporting on something backwards, it's not going to be a financial model. And I've got some examples here, and this is where people might go, oh, wow, I actually am doing financial modelling and I didn't even realise. So many accountants will be preparing budgets, or in lots of roles, you might have inputs into budgets. Generally, they involve financial models. There's project forecasts, financial projections for business cases. So I mentioned I used to do that a fair bit at Telstra, and we do that at Brisbane City Council as well. Pricing scenarios for new products, and business valuations. So there's some examples of financial modelling, and I think a lot of people wouldn't realise that that actually does involve a financial model. If you've got these 3 elements here, that it's dynamic, it involves assumptions, and it's a future time period, then generally it will be a financial model. So we're going to go into a poll now. And is the poll, Danielle, going to come up through, is the poll on, or is this coming through Slido? Oh, great. Okay. So Danielle's got, oh, Danny, you're on mute, Danielle. Oh, there we go.
So, yep. So, let's give it a go. Let's try Slido. So, you could just be watching a YouTube video, but we'd like to get you guys involved. So the point of having these live meetups is to get people involved. So if you could just grab your phone and just put it up to the screen, or you can go to slido.com if you're on the browser and just put in the PIN code, and then you'll be able to participate in the poll. And we're going to do a couple of little interactive things with you. So I'll just launch that now. So that should give you, if you're able to get on with the QR code and go to slido.com. Okay, wow, we can see,
as we go.
All right. Yeah, really interesting to see the experiences that people have got. A few people have never used it. Okay.
Which is wonderful that you've made it to this discussion group. This is exactly what these discussion groups are for, people of all levels to learn about what are the opportunities with financial modelling.
Okay.
Yeah, wonderful. So prepared some basic financial models, but didn't think of it as financial modelling is certainly coming out.
Yeah, that seems to be what most people are saying. All right. Shall we go on to the next one?
Yeah, wonderful. Yep.
So this one, we're going to get you to actually type in. So actually, it's a word cloud. So what type of models do you work with? So those of you who do build financial models, even if you may not have thought of them as financial models before, if you could just put in, I think you can enter a couple of entries, and yeah, okay, budget seems to be, oh, okay. Oh, three-way financial models, that's great. Scenarios. Oh, budget seems to be
budget. Well, that's definitely been the most experience that I've had is through budgets. Discounted cash flow.
Interesting.
Wow, lots of different types. Oh, LBO M&A. You're wonderful.
Okay, shall I stop sharing now and we'll go back to your screen?
Yes, okay, I'll share mine again. Okay, should switch back in just a second. So budgets. But there's you can see there's lots of different types in there. I remember when I first went to a meetup group, I went, what people are using? But, banking and finance is one of the main areas, which I had, investment banking, I had no idea before I went to one of the meetup groups. Okay, so we've done what types of models do you work with? And then I guess the question that comes out of that is, well, if I'm doing financial modeling and I didn't even really know it, why would I want to improve my skills? Why is it worth my time to do this? So the first thing is saving time. So if you have standard practices that you can follow, you can certainly prepare models a lot faster. Also, if you've got less errors, you're not wasting time trying to go through the errors, particularly at times that might be inconvenient for you to be spending that time if you're right at the end of something and you want to get it out. It also helps improve business decisions. So more accurate and more insightful models will help your organizations in the decisions that they're trying to make out of that business, out of that financial model. You'll also be able to, through those things, less errors and better models are going to increase your influence and open up career opportunities for you. I think financial modeling is an area that is growing extremely quickly. I think the term financial modeling has really only become, common that I've heard around in the past 10 years. So the options for you, if you have strong financial modeling skills in lots of professions, are going to be stronger if you're able to demonstrate those skills. Danielle, just let me know if you do want me to stop for any questions. I'm just sort of going through the presentation, but happy to take any questions. Or if they're more general, we can leave them till the end.
Yeah, I'll interrupt you if it's necessary.
Okay. So common issues with financial models. Some of these are a bit harrowing to remember back things that have happened. So errors. This one is, I can think back to many a time that I've learned this one the hard way, that these types of errors come up. You are literally pulling your hair out. It could be late in the night and something's due the next day, or the worst is if you're in an important meeting and you're putting the model up on the screen and you're using it as a dynamic model live in the meeting and something is an error. It is extremely frustrating, and obviously the confidence that people have in the model if something like that happens is not great. So errors are probably the most common issue that people have, and the scariest one often. The scariest one that's obvious, I will say, there probably are more scary things, but you just don't realise they're there.
Yeah, bit of a career killer.
Yes, but we've all been there.
Ability, yes.
So hard to understand and use is another common problem with financial models. So I've put an example up there where poor structure, layout and formatting can make it a lot harder for people to use your model and understand it if you're showing it to them. So I've got two examples there. The one on the left clearly is pretty limited in its formatting, and it's quite difficult to understand. Everything's in the same format. You can see there's some things that are typed in there. So we've got, I think it says 2 bobbins. We've got numbers that are hard-coded, so obviously that's not going to be able to be used in a calculation because we've got words in there. We've got a lovely note there indicating what an assumption is, as opposed to just typing it in and clearly showing it in the cell, versus the one on the right where it's much easier for the eyes to take in. You can see that there's different colouring used. So blue would be inputs here and black would be the calculations. And we've clearly got the dates label. It's consistent. So you can easily see that some of it is historical, some of it is the forecast. It's just quite quickly you can tell what the story that picture is telling. So the difference in formatting makes a huge difference, and we can tend to just want to get the result out there, but the extra time spent on layout and formatting makes a difference. Some other issues around being difficult to understand and use. If it's difficult to hand over to another user, you know that there could be some issues there. So one big one is macros. Macros can be very handy, but a lot of people don't know how to use macros. So if you put macros into your model and then the next person who takes it over doesn't know how to use macros, then all of a sudden overnight your model could be completely useless. So you've got to think about who's using it and is it absolutely necessary to put some of those more technical elements into it. Better to speak the common language as much as you can. The other thing, this is a real bugbear of mine, overly complicated formulas. So I've got an example there of a whole heap of nested if statements. We could have just used a sum if there. So the main issues with overly complicated formulas would be poor function choice, so choosing a formula that's less than ideal, not as useful as another one. Referencing other worksheets, so it's best to avoid that where possible because it makes it hard for the other person to follow, for someone else to follow, and for yourself to follow if you're trying to check it. And the other thing is trying to do too many steps within the one cell. So often there's a simpler way we could do it. For this, it's very hard to do a course and then remember. The best way to learn how to simplify your formulas is by doing. So when you're doing it, think, oh, geez, this is starting to get complicated. Maybe there's a better formula I could use. Just Google it. That's how most people learn. Just when you find something that you think could be better, try Googling it. And lots of Excel forums will come up where someone will definitely, with more time than us, have answered this question before. And then another really, this is probably the scariest for me out of all of the common issues with financial models, is assumptions without enough rigor. So we've got to remember that a model is only as good as its assumptions. Garbage in equals garbage out. So people often rush the assumptions and they're doing the model and spending heaps of time making it look really, really good and that it's all really accurate, and then it's due tomorrow and we don't have any assumptions. So we quickly throw all of these things into it. And then what happens is, because it looks really fancy and people think, oh, geez, what's going on in there? What a great job they've done. They'll accept it as fact. So people won't tend to question, as long as it's working properly and you don't get those errors come up, people will assume that the model is just magical and can tell the future. So they'll accept what comes out of it as fact. One way you can help avoid this is by using scenarios and sensitivities to help people show that it's not fact, we're making a projection and there's a range of possible outcomes. So if you do only one set of assumptions, it often gives the impression that the assumptions are perfect. Oh, I think we've got another. Is this the Slido that you've put on in the chat box, Danielle?
Yeah. So
roll again.
Yeah, I thought we've just collected a couple more answers in the meantime, and I'll just launch the final one. So we'd like to hear what kind of issues have you had with financial models. And whilst we're doing that, our friend Andrew Berg, who was one of the presenters from our last Brisbane meetup, says the rule of thumb is that if a formula is any longer than your thumb, then it's too long. Thank you, Andrew. That's a that's a great one.
Do taller people get to have longer formulas?
Okay, so we're getting a few answers here. So the issues that people are having with their financial models. Human stupidity, yes.
Hard-coded, oh yes. When you think that something is flexible and it's actually not.
You're happily typing in inputs, typing away, and then discovering that they're not actually linked. So it's not doing anything to drive the model. So that's a really frustrating one. Rubbish data, yes. Hard coding seems to be a common pet peeve with people. All right.
Excellent. And poor documentation, yeah. That's part of the whole assumptions area.
Okay, I'll stop sharing and hand it back to you, Jessica. We've got a couple of questions. Maybe we might leave those to the end, actually.
Okay, can you see the screen again?
Yes, we can see.
Okay, so we'll go on to the next one. Okay, so now we'll look at those best practice principles that I was talking about. And these are ones that I do think, and I will mention at the end the ones that I think are the easiest to implement straight away, but hopefully they are fairly practical. So the first area we're looking at is the building blocks of the model. So number one, plan the model. So what is the purpose of the model? Always come back to this. We're trying to solve, a model is trying to solve a business question. What is that business question that you're trying to solve? And remember that all through planning the model. So that have a logical structure to the model, have your inputs, your calculations, and your outputs. So plan that at the start. How detailed is the model going to be? How many sheets are you going to need to use in the model? Is it going to be a very simple one-on-one sheet, or is this a more complex, a complex model that will need several sheets? How likely is it to be reused? So do you know that this is just definitely a quick pricing decision that needs to be made, and it's going to be a one-off transaction? We don't need a template for it, versus something like a budget where potentially it is going to be used over and over again. Good to think about that at the start when you're planning it. How many time periods are you going to have in the model, and which time period will they be? So is it going to be monthly, yearly, quarterly? Have a think about all of that from the start rather than getting too far into it and then having to pull back and rebuild it all. Planning up front will save you a lot of time later on. Number two, invest time in assumptions. As I said, that poor assumptions can cause you lots of issues. So best to put time, do this as a building block. Think of this at the same time you're planning the model. What assumptions will you need? An example is if you need payroll data, you know you're going to need to know salaries for this. Then contact payroll right at the start. This is going to be a long lead time potentially for them to get this information ready. So who can you call right when you're starting to give them as much time as possible to get their information ready? Then the next area is layout, format, and formulas. So this is the main build of the model. Number three, clearly separate your inputs, calculations, and outputs. I put in capital letters here, never hard code your assumptions within formulas. So we saw in the word cloud, obviously that is an annoyance for lots of people. Don't hard code your assumptions, pull them out and put them in a separate area within your model. Make it really, really clear with a different color what people are supposed to touch in the model and what they're supposed to leave alone. So what are the assumptions and the other inputs versus what are the calculations? We don't want people mucking around with the calculations, but we do want them to clearly know where they can change assumptions if they're supposed to be. So a common color scheme for financial models will be blue for inputs and black for calculations. In Excel, there's also color schemes where you can choose inputs. It's got like a standard color scheme there. In accounting, we usually use yellow. So yellow will be inputs generally when we're doing ones in accounting. The next one is build top to bottom, left to right. So this one's about, think of how you will read a page. If someone's going to look at your model, it's going to make most sense to them if, say, you're building a revenue schedule, that you put the volumes up the top and then you work down the page to do your calculations to calculate the revenue at the bottom. Now, you will sometimes have summaries at the top of a page because if you want people to be able to just quickly see the important information, it's possible there'll be summaries at the top. But generally, I try to follow building top to bottom, left to right, because that makes most sense to people when they're looking at the model. Number 5, keep formulas consistent across rows. This one is important because we assume that the formulas are consistent across rows. So when you go in later, 3 weeks later, and go and think, oh no, I need to update this formula, you might forget if halfway along that row, you've actually made an adjustment to the formula, and then you're just going to copy it and paste straight across and delete the information that you've actually changed partway across. So it's really important to keep them consistent. It's sometimes you can't because there's reasons why a certain year you have to change the formula or whatever it is. In this case, make it super clear that you have changed the formula. I think, Danielle, you suggest in your book maybe putting double lines to indicate where the formula changes. But there's lots of ways to indicate it just so that it is very clear that the formula has changed. That will help stop people from copying and pasting over the top of it and not realising that it changes. Number 6, break down calculations into simple logical steps. This is the one we talked about before, about overly complicated formulas. So as financial modelers, our job is to help solve a business question. Our job is not to prove how smart we are in Excel. That is not what we're there to do. So if you know some really complicated formulas, or you've got this 5 rows long formula and you think it looks really, really good, you have to think about what is the person who's going to try and review this model or use this model going to think about this formula. If they can't understand what you've done, it doesn't help anyone. So remember, we're not trying to prove how good we are at Excel. If we're building financial models, it's likely that we are reasonable at Excel. So our job is to keep it absolutely as simple as we possibly can and still achieve what we want to do. I try to avoid using the offset formula. Lots of people like it, but that one, when I review models, it's very hard to tell where the information comes from if you use the offset formula. Try not to use lots of nested if statements. We saw that one earlier. And try not to reference other sheets. Try to avoid that where you can. It's not always possible. One way you can avoid using other sheets is to use helper rows. So, for example, if you had an inflation number and it was on another sheet, normally you'd be linking to that other sheet and bringing in the inflation number. What someone would have to do is they'd have to trace it through to that assumption sheet and see the inflation number to check, oh, okay, that's what the person's bringing in. What you can do instead is to bring that inflation number into the sheet that you're going to use it in. So you have this row of inflation numbers. It's very clear what's there. The person can trace that back to the original assumption if they want to, and then you reference that helper row in your formula. So it just means that people can clearly see what you're linking to. They're not having to try and trace back to other sheets. There's a good website called Wall Street Prep. I'll include it in the resources that we're sending out, and that has lots of good tips about how to make your formulas more simple and logical. And number 7, we've got use clear labeling. This one, I think it's clear how it would be useful when someone goes into a financial model. Make sure you, especially units of measurement, you reference those. So if you think it's, in your organization, if it's really, really obvious that this number is always in thousands, no one would ever confuse that this number is always in thousands. Just remember that new person who comes in who's not going to realize that that number obviously is in thousands, and clearly label every single column as the thousands, or, make it very clear to anyone.
Yeah, I think it's probably one of the most common source of error, isn't it? Mixing up units. Absolutely.
Yeah, people just don't. People think it's obvious when they build it, but then when someone else goes into it, it's not necessarily obvious. The other thing is when you're doing assumptions, make sure you show the unit of measurement on there. So if you were, say, doing a rental calculation and you had something that was in square meters, you might be tempted just to put, $600 and assume that people know that's $600 a square meter. But make sure you put next to it in another cell that it's meters squared, because other people might not realize that's what you meant by the $600. Okay, so we've been through the planning the building blocks of the model, and then we've done layout and structure and formatting. The final one we've got is ensuring a quality output. So number 8, include scenarios or sensitivities. Scenarios involve changing multiple assumptions for a given number of scenarios. So you might have your base case. So generally this will be the standard output of a model, a base case. If you create some scenarios, then you're changing a certain number of assumptions in that model and creating different scenarios. So you might have a best case scenario, a worst case scenario, and you've got your base case. So, there can be an unlimited number of scenarios, but they help people show what's the range of likely outcomes for this business question we've got. Sensitivities are a little bit different. That's where you're usually you try out one assumption in the model and see how sensitive is the model to this assumption. So say with inflation, like we were talking about before, if you made it 3% in your base case, you could go 4, 5, 6, 7. What if it was all of this range? What would the outcome be for my business question, for my financial model? And on the other side, if it was 2% or 1%, what would the outcome be? How sensitive is my model to the assumptions that I'm testing? So doing the scenarios and sensitivities adds a lot more value to your model. It helps the person who's making the decision see this range of possible outcomes and see that this is a projection. So we've got to make sure we're comfortable with our assumptions and we're comfortable with the idea that there's a range of possible outcomes. Number 9, build in error checks. So I suggest building error checks as you go. It's difficult once you've built a financial model to go back and think, oh, what could go wrong here? But when you're building it, it's pretty, you can think, oh, this might not add up, or this might not calculate in the way I thought it was going to. So build them as you're building the model. It'll also help you to find errors as you're building. So if you've built in some earlier error checks, they might get thrown out when you build further aspects of the model. And that all helps in making the model more accurate.
Oh, I can't tell you how many times an error check has saved the day for me. Boy, often somebody will use the model in such a way that you wouldn't expect, and that will get flagged by the error check. It can really help.
It's quite shocking what error checks come up when you think it's the most simple error check that could never be wrong, and normally sometime in the model build will come up with an error. And lastly, test it. So once it's all built, don't assume that it's working properly. If you can get someone else to test it, even better. But if there is no one else to test it, you can certainly do lots of tests yourself. And I would recommend doing that before you hand it over anyway. So some examples of things you can do. throw in a huge number into it. So put in 1 million into an assumption. And when you put in 1 million, it's going to be really obvious how that number assuming that the number wasn't 1 million before, if it's normally 10.
The stress test, yeah.
You will see it flow through the model. And you can see, is it flowing through in the way I expected it to? Or, is it only coming through at half what I thought? Or is something going wrong with this? It'll make it really obvious. The other thing you can do is to delete certain items. So if you delete something, it should, and see if the model reacts how you expect. If it doesn't reduce a number you expected, perhaps it wasn't included in the original formula, or there was a problem with one of the formulas. So if you delete something, you can see, does it have the effect you'd expect? The other things you can do, test items on a calculator. Like sometimes I will just check, if I calculate this out, is it what I expect it to be? You can use trace precedence. So that's testing, like, where do these items come from? Is everything I would expect to be in this calculation in there? You can use spark lines. So they're like little graphs where it shows how something moves. So these are really useful for budgets. And we do use them at Brisbane City Council. So you can look at your P&L, and if you have a spark line on every line, and all of a sudden, sales in year 10 of your model just drop off a cliff, it's really obvious there's something wrong with your model. But when you're just looking at a whole page of 300 numbers, you might not pick up that something that's seemingly really obvious is wrong with it. And the last thing I would say is a logic test. So once you've done all your detailed tests and you feel you've done everything that you can do to make it accurate, then step back, have a break from it, rest your eyes, and then look at it and think, is this model doing what it was supposed to do? Is it answering the question it was supposed to answer? And then, do the numbers make sense? Is there something really strange? Last year we had this set of numbers and now they're double. Like, is there a reason that they're double now? Does that make sense? And possibly it does make sense. But you can think through in your mind then, do these numbers actually logically make sense? Because as you go to take this model to other people, they're going to notice things, hopefully, if they don't make sense. And you want to find those things before it gets to people up the line. So they're the 10 best practice principles. And I've said start today. So I'll go through them again. We've got the building blocks first, which is to plan the model and invest time in your assumptions up front. We've then got the layout format and formulas, which is to clearly separate the inputs, calculations, and outputs. So the structure of your model and the formatting. Then I've said build top to bottom, left to right. That's more logical for people. Keep formulas consistent across rows where possible. Break down the calculations into simple logical steps. So the simpler, the better. That still achieves your outcome, the outcome that you need. Use clear labeling. And then to ensure a quality output, I've suggested include scenarios and or sensitivities. Build in error checks, and lastly, test it. So if you want to improve your models today and something you can literally start adding in now, I would suggest number 3, so clearly separating the inputs wherever possible. Go and change those assumptions to make it really clear their assumptions. Number 6, breaking them down into simple logical steps. What formulas have you got that could be simpler? And can you add 3 rows and break that calculation into 3 rows rather than trying to do it all in one huge formula? Number 8, include scenarios and or sensitivities. So to me, this is the biggest value add one. If you can create scenarios and sensitivities, your models are going to be far more useful and insightful to decision makers that are using them. And number 9, build in error checks. So they're the ones I suggest if you want to quickly make some improvements, try those first. Danielle, are there any questions that you wanted to stop with while we're on the presentation?
Yeah, there's quite a few questions, but a lot of them are relating to further resources and ways that people can get their hands on examples and templates and things to play around with. So a couple of the questions, so one from Haley saying how to find the best practice financial model template, like a 3-way financial model to practice. There's another one from Lucian that says, is there, we don't have in his daily work, we don't have much exposure to modeling, so what's the best way of doing that? Melissa's mentioned the Wall Street prep resource. So Jessica's put together a list of some good resources which I'll send out in the follow-up, so you'll get access to that. I think when you are it's good to do some training or to do some online looking at examples, but actually on the job experience I always think is the best, and failing that, to compete in the Financial Modelling World Cup is another great way to get exposure to lots of different types of models, and a lot of those are really like the real world. Was there anything you wanted to add to that, Jessica?
Some of those experience ones, I will reference those in some resources that I'll talk about at the end. So I might go through those things.
Just a question, actually. Just a question about the tools. So has anyone used Power BI? Any comments on using Power BI for modelling, and how important is it to be skilled with Power BI, Power Pivot, DAX, Python, data visualization? Do you have any tips on those, Jessica?
I think it depends what type of work you're doing and what type of models you're doing. Generally, I think Excel, when you're doing, excluding specialized software that certain companies might use for, say, budgets or something, I think Excel is the easiest and most universally accepted way to do models. We have to think about the fact that it's going to be often handed over to other people. So you don't want to go using specialized software if possible. I mean, obviously Power BI is not specialized. Power BI is probably not as suited to doing most types of modeling as Excel. It doesn't have the same functionality with doing the formulas and doing all the scenarios.
It's not about that sort of dynamic kind of inputs and outputs. It's about large data crunching and visualization. Power BI is fantastic, but
so it definitely has its place. And I think those who are involved with financial modelling often have jobs that also involve an element of financial analysis or some type of analysis. So in that case, Power BI and the suite of tools that's been mentioned there, certainly, yes, definitely would be great to learn. So it depends whether you need it in other aspects of your work, I think. So I think it is great for analysts to learn those tools. But for financial modelling, it's probably easier to use Excel. And I think you've run a few webinars where people have tried using Power BI to do financial modelling, and it can be done. But it is more of a visualization for large data. That's what it's for. Excel is the expert in what we need for financial modelling generally. But again, it depends what it's for. If the visualization aspect was really important and you had a lot of data in your model, then maybe it would be the most suitable.
Just one other question about from Gunjan about approaching a brand new project with no historicals to find the most profitable site with a very vague scope. That's a hard question. Oh. Do you want to try that one?
Question, sorry.
Yeah, how to approach a brand new project that doesn't have any historicals to find the most profitable site with a very vague scope. That's quite a hard situation to be in, and I think it really just comes down to making your assumptions and knowing your industry.
I think in that case, those building blocks become really, really important. Planning the model to say, well, what have I got? Because in order to build a model, you have to have assumptions. So you have to work out, well, what's the best information I've got? What's the most detailed level I can get? What's the most useful information I can get? And then how am I going to plan the model around that? Because as we've said, the model's only as good as its input. So I think planning up front and talking to people about the assumptions, can I get better information? And then being really clear and upfront with your stakeholders about what is the quality of the model that you're going to be able to produce, and that you'll probably need to do quite a few scenarios and sensitivities to show them that because there's not much historical data, there's a huge range potentially of outcomes. You don't have as much to go on to do your assumptions.
Yeah, scenarios are great for that when you're really not sure. Yeah.
Because if someone sees that the result could be double or half, or, you know, could be a loss if certain things, assumptions come true, it really helps them understand, okay, right, you know, this model is telling me something, but there's a huge range here, and I have to take that into account when I'm making the decision. I do see the time, so I might move on just to make sure I get through the last slides. The other thing I've put in here, I think a couple of people did mention accreditation options. So if you are interested in learning more about financial modelling, and you feel you're in a type of role, or you want to get into a type of role that's showing that you have you're able to demonstrate your skills, then getting accreditation is a good option. I've put in a couple there. So the main ones in order to actually get accreditation would be the Financial Modelling Institute and the Corporate Finance Institute. They're the ones that are generally discussed around being able to actually get a certificate that you could perhaps present. And I've shown what they're useful for here. So the Financial Modelling Institute is the one that I went through. And I think this at the moment is the most recognised financial modelling accreditation. They have 3 levels. And at the moment, I've done the Advanced Financial Modeller, which is the first level. And it is a 4-hour practical exam. It used to be in person, but I think now potentially it will only ever be online, because
virtual now. Yeah,
it has to go virtual with COVID. It is it's a difficult exam, but now there are training providers, and I know Danielle is one of them. So you have quite a lot of training you offer for that now, don't you, Danielle?
Yeah, we have an online one that takes people through how to prepare for it.
Yep. So that one I would suggest if you want to demonstrate proficiency in financial modelling. Corporate Finance Institute is a comprehensive online course where there's many modules. I'm assuming you can pick from different ones that if you want to specialise in something. If you're trying to learn financial modelling top to bottom, that is a very comprehensive course. I wouldn't necessarily use it to demonstrate proficiency in financial modelling, because I think the tests, perhaps you get unlimited chances to redo the test, but it is a really good option for learning financial modelling.
It's sort of like they provide the training, but then they also provide the certification, so there isn't that sort of distance between the two. I know a lot of people will actually use CFI to get that qualification, and then they'll do the FMI. So you end up with basically 2 qualifications.
Yeah.
Yeah.
Yep. So it depends what you're looking for. They're a similar sort of price. So that's accreditation options. The other thing I've got is some further resources. So I've prepared a sheet that has some like specific websites to go to, a list of a website that has some books if you're interested. So don't feel you need to record any of this now. It will get sent out. So I'll just go through this quickly. If you do want to learn more about financial modelling, there's lots of websites out there. There's books on the topic. I think Danielle's got 2 books.
There's a whole lot of books behind me. Can you see them?
Got them in the background. Call now and you can get a set of steak knives with them. The other thing is the Financial Modelling World Cup. This is a new one that's only been around for about a year. This is excellent if you're trying to learn financial modelling. I've put the little timer on there because, oh geez, it is serious time pressure. You get 2 hours to prepare these financial model. I mean, some of them are full financial models. Some of them are very quick little, you might do some depreciation. But it covers a lot of topics in financial modelling. And the great thing is afterwards, if you've done the test, you then get access to the prepared suggested answers. So if you're trying
fantastic resource, yes, so many cases, yeah.
Myself, but they do send out the detailed answers. So you could go through that and then improve what you're doing. And it's really comprehensive. So that's a suggested one if you want to try doing it under time pressure. And
it's only about $15 US to enter. So it's really not an expensive thing to do.
Yeah. So that's a good one to test yourself to see how you're going. The other one is there's a financial modelling podcast. I think Danielle's been on that a few times. Matthew Bernath runs that.
Yeah, he's in South Africa.
The other one is that there's a LinkedIn group. So just search for financial modelling in Excel, and that's got current topics, discussions, and things on there. And the other thing is the Meetup groups. So you've obviously found them if you're at this session, because this is one of the Meetup groups. Potentially they might be in person further down the track as COVID.
Fingers crossed.
Fingers crossed. So I'll quickly go through what we've covered, and then we'll have just a couple of minutes for questions. We've covered, so I went through my story with financial modelling. We looked at what is financial modelling. People probably discovered that a lot of what they're doing in their work now is financial modelling. We looked at some common issues. So we had errors and assumptions not having enough rigor behind them. Some best practice principles. So we went through those 10 principles that you can start applying today. And then we've just quickly looked at some accreditation options and resources to explore further, which we'll send out after the webinar.
Okay. Fantastic. Thank you so much. I think we pretty much addressed most of the questions in some way or another, so we might leave it there. Thank you so much for sharing all of that information with us, Jessica. That was a really good overview of the world of financial modelling. So thank you so much. Was there anything you'd like to add before we sign off?
No, thank you very much for having me, and I really hope that it helps people just find that there are simple ways to improve what you're doing for work, and I hope it has an impact for you and for your career.
Yes, I think it's one of the best things you can do for your career is to improve your financial modelling skills. I have been doing it for many, many years and applied my modelling skills all over the world. And if you've got good Excel skills, it's something that is going to stand you in good stead right throughout your career. So it's a fantastic world to be in. So thank you, everybody, and until next time, bye for now.
Great, thank you. See you guys.